Top 10 Index Funds. One of the best ways to get a higher investment return is to pay fewer fees. Index funds offer diversified holdings and help investors keep more money so their earnings can compound faster. Index funds are a great option for any investor and are particularly suitable for smaller retail investors, says John Ingram, Chief Investment Officer and Partner at Crestwood Advisors. Many of the lowest fee index funds follow large cap stock indexes in part, and some index funds follow niche sectors. Those funds can be one of the best low-cost ways to invest in those areas. In this video, we'll discuss about top 10 index funds. Before starting the video, be sure to subscribe to never miss out on any of our videos. Number 10. SPDR Blackstone GSO Senior Loan ETF SRLN. Investors looking for a fixed income alternative to US Treasuries could look at SRLN. Ingram notes the fund buys floating rate bonds that will increase interest payments as interest rates rise. People worried about future inflation due to recent monetary and fiscal stimulus action should consider SRLN. Inflation erodes bond returns, so owning bonds that adjust their coupon as rates increase may prove beneficial, he says. Floating rate loans do have higher credit risk than high-quality bonds, so investors should realize that these bonds have some default risk. With higher risk, the fund offers a higher yield of 4.4% compared to the US Aggregate Bond Index's yield of 1.2%. SRLN has an expense ratio of 0.7%. Number 9. iShares Core MSCI Europe ETF IEUR. IEUR is a broad-based European index-based ETF which follows the MSCI Europe IMI index. Garza picks it because of its low-cost 0.09% expense ratio and its highly diversified holdings across all 11 sectors. It is also market cap weighted and includes approximately 75% in large capitalization firms, which we like in an index fund, he says. This fund also rates highly in MSCI's ESG ratings, receiving a score of 7.71 out of 10, which makes it an above-average fund based on long-term risks and opportunities arising from environmental, social, and governance factors. Number 8. Franklin FTSE Japan ETF FLJP. Daniel Garza, research analyst at Intercontinental Wealth Advisors, says investors interested in targeted exposure to Japanese equities could choose the low-cost FLJP index fund, which has a fee of 0.09%. The fund tracks large-cap and mid-cap Japanese firms via a market cap weighted benchmark index, which Garza says works well in an efficient market. Although it could underperform other indices that have smaller cap stocks, we invest in this ETF based on the fact that we believe that the large capitalization firms tend to reflect more information, have more liquidity, and are more efficiently priced, he says. Garza says a popular competing Japanese ETF, the iShares MSCI Japan ETF EWJ, has a much higher fee. Number 7. Vanguard Total World Stock ETF VT. Robert Johnson, professor of finance at Creighton University's Hyder College of Business, recommends VT for a low-cost index fund that holds both US and international equities. The fund tracks the performance of the FTSE Global All Cap Index, which covers both well-established and developing markets. Johnson says the expense ratio of 0.08% is very low for funds containing non-US equities. It currently has an allocation of 59% North America, 17% Europe, 12.5% Pacific, 11% emerging markets, and 0.2% Middle East. Number 6. iShares Core S&P Small-Cap ETF IJR. Investors should consider some exposure to small-cap stocks as part of their core holdings, Ingram says, and he suggests IJR, which follows the S&P Small-Cap 600 index. This fund and the index it follows keep out the unprofitable small-cap companies, and it has historically outperformed the Russell 2000 index, a much broader small-cap index. Small-cap stocks tend to be more economically cyclical than large-cap stocks and would be supported by the continued economic recovery, he says. Small caps have struggled compared to large-cap stocks lately, but they are off to a strong 2021. IJR is up about 25% over a one-year time frame, and the fund has a 0.06% expense ratio. Number 5. iShares MSCI USA Minimum Volatility Factor ETF USMV. USMV tracks the MSCI USA Minimum Volatility Index and invests in US large-cap stocks with lower volatility. The fund strategy is intended to avoid hot stocks which are removed as their stock price fluctuates too much, Ingram says. During market downturns, USMV tends to outperform as investors dump these hot stocks because it avoids the hot stocks. It can lag behind the broader market when equity prices are in a strong bull market. But the fund tends to perform well over a market cycle. USMV has a 0.15% expense ratio. Number 4. Vanguard Total Stock Market ETF, ticker VTI. Don Benioff, Investment Committee Chairman and Director of Investor Education at Portfolio Solutions, recommends VTI as a keystone investment for nearly every investor who holds U.S. equities. As the name implies, VTI holds all the stocks in the equity markets, so it offers investors broad diversification, and VTI's annual expense ratio of 0.03% or $3 for every $10,000 invested makes investing extremely inexpensive. VTI seeks to track the performance of the CRSP US Total Market Index. If Leonardo da Vinci was right and simplicity is the ultimate sophistication, then the Vanguard Total Stock Market ETF should be considered one of the most sophisticated investments offered, Benioff says. Number 3. VXUS Vanguard Total International Stock ETF. While VTI is the whole US stock market, VXUS from Vanguard is the entire international ex-US stock market. Most US investors have home country bias favoring US stocks, but international stocks provide an important diversification benefit because they are not perfectly correlated with US stocks. During the period 1970 to 2008, an equity portfolio of 80% US stocks and 20% international stocks had higher general and risk-adjusted returns than a 100% US stock portfolio. I choose to allocate 20% to international stocks in my portfolio. VXUS seeks to track the FTSE Global All-Cap ex-US Index. In other words, this ETF is composed of all stocks outside the United States. VXUS is an important piece of the Bogleheads 3-fund portfolio. This fund has an expense ratio of 0.08%. Number 2. VNQ Vanguard Real Estate Index Fund. Investing in real estate can add some extra diversification to a stock portfolio with its low correlation to the stock market. This is done with real estate investment trusts, or REITs for short. The Vanguard Real Estate Index Fund is the most popular REIT fund and seeks to track the MSCI US Investable Market Real Estate 2550 Index. This fund has an expense ratio of 0.12%. Number 1. ESGV Vanguard ESG US Stock ETF. A new wave of interest surrounds socially responsible investing in companies that are screened for specific criteria based on environmental, social, and corporate governance (ESG). This fund from Vanguard tracks the FTSE US All-Cap Choice Index, excluding stocks in the following industries: adult entertainment, alcohol, tobacco, weapons, fossil fuels, gambling, and nuclear power, as well as companies that don't meet standards of UN Global Compact principles and companies that don't meet certain diversity criteria. This fund has an expense ratio of